Ralph Silva, he's an analyst at Silva Research Network with more than 20 years' experience in investment banking. Good to see you, Ralph.
Right.
We don't know exactly what happened, but the fact that such a loss of such magnitude could happen tells us what?
Well, it tells us that there is no validation. There can't be any validation. The markets work in quarter of a seconds, and to validate everything that this person was actually doing takes more than a few seconds, so you simply can't do it and remain profitable. So they allow these people to take on their own responsibility in these huge amounts of money, which means they have the potential of having these huge losses.
But is this a systemic problem for all banks?
Yes, absolutely.
And it would still happen, even after what happened to Jérôme Kerviel only a couple of years ago?
It happens on a weekly basis, but not at the $2 billion level. Generally speaking, pretty well every one of the major banks will see somebody going into this position and pulling themselves off or pushing the stop sign at around £1 million British pounds. This guy kept on going. It's happened to me before. You have to know when to stop. And this trader decided he didn't want to stop. He wanted to get it back. He kept getting deeper and deeper in the hole that has no end.
But I would have thought, I mean, call me naive, I'm just a journalist, I'm not a trader. But there would have been some sort of computer algorithms which would set a limit, or at least flash something up to somebody that this is going completely haywire.
Well, it looks like the computer's limit was $2 billion and one, because that's how far he was able to get. Remember that the margins are so small. 20 years ago, the margins were pretty large, but now the margins are so small, you have to give these guys huge amounts of money so that they can make money. And that's the problem, is when you give them huge amounts of money, they move that. The computers have to allow a very large movement of funds, and that's where the problem comes into play. If you reduce the limit, you reduce your profitability.
What do you think this tells us, and how much does it give support to the ICB banking report last week, which separates retail's arm for the more risky investment side? Do you think, actually, given an example such as this, it gives that much more ammunition and support?
He's really not helping us out. This is really bad timing. The truth is this is what everyone's talking about, the casino banking, which is such a small part of the bank itself, because this is not customer money, this is bank's money. And this is exactly what we need to stop from happening. So this may be a message that we say proprietary trading has to stop at the financial services institutions.
Now, we know UBS has been somewhat battered over the past few years. What does it mean now, this particular incident, for UBS and the future of its investment banking?
My biggest concern over UBS right now is the high net worth individuals, the private banking customers, because we have to give UBS credit. They've turned it around. In the past few months, we've seen an enormous number of people coming back. Now, high net worth individuals got to start thinking, is this the right place to put it? Do they have enough controls in place? I think Credit Suisse in the end is going to win.
And Credit Suisse is going to win, and how much pressure actually does this put on Mr. Grobel, the CEO?
It's a tremendous amount of pressure, but the bank is sound, so $2 billion isn't going to bring him down, but it is sound. But he's got to take care of his marketing, he's got to take care of his brand.
Ralph Silva, for now, thank you very much indeed.